Wow, Lulu, I think you getting into AI is cool, but robotics, isn't that just a little too far?
Time to buy, Lulu.
Are you sure it's safe?
Of course it is, Guru.
Evening, Garage Gang. It's Friday, January 23rd, and tonight we're back in the garage. The lights are low, the concrete's warm, and the market just reminded everyone who's actually driving this thing. This tape wasn't calm, it wasn't polite, it was mechanical, emotional, and violent all at the same time. Gold and silver are moving like real money, just shifted gears, not day traders, not Reddit, balance sheets. Is metals in, or is this just capital bracing before the next hit? We're not calling it yet. We'll talk about it. But first, let's run the headlines. Gold just broke all-time highs again. Not hype, not a tweet, real money doing real things while everyone else argues. CZ goes from a prison cell to a Davos stage. Same guy, same industry, completely different world. That's not luck. That's a comeback. You don't get invited to Davos if your industry is dead. You get invited when it's too big to ignore. That's crypto moving from the penalty box to the main stage. Intel drops like a rock. No warning, no mercy. One bad turn, and the market reminds legacy tech that AI doesn't wait for anyone. And Wall Street took a quick kick in the balls today. Not a crash, no reminder. Liquidity is thin, narratives are sharp, and hesitation gets punished. Bitcoin whipsawed traders like a street race in the rain. Longs got liquidated, then shorts got liquidated. Confidence got punished on both sides. And while all of that chaos was hitting the screen, regulators quietly shifted tone, talking cooperation instead of enforcement. That's not bullish today. That's structural for tomorrow. All right, now we slow it down. This is where we explain it all. What you just watched wasn't panic. It wasn't crypto failing. It was mechanics. Big money didn't dump the asset class. They exited a trade that stopped working. ETF basis trades snapped. Leverage math broke. Funds hit the eject button, not emotionally, but systematically. Retail saw red and assumed disaster. Institutions saw dislocation and went to work. That's why price fell fast without fundamentals collapsing. That's why it felt violent. And that's why it confused people. Too many traders stayed confident on the wrong side. So the market did what it always does. It punished certainty. Longs got wiped. Then price snapped. Then shorts piled in. Then they got wiped too. That's not direction. That's a reset. Now let's talk about gold and silver, because this move matters. Gold and silver aren't ripping because Twitter got excited. They're moving because capital is hedging uncertainty, not chasing return. This isn't just inflation chatter. This is about trust. Liquidity is tight. Geopolitics are unstable. Narratives are violent. When that happens, smart money doesn't ask, how do I get rich fast? It asks, how do I not lose purchasing power? That's why gold broke highs again. That's why silver followed. This isn't panic, it's parking. And silver adds something extra: industrial demand, energy, AI hardware. So when gold and silver move together, it tells you this is hedge plus future demand. Is metals the trade? Maybe. But in the garage, we don't chase what already moved. We listen to what it's telling us. And right now it's saying, respect the environment. Now back to CZ, because that headline matters. CZ going from a prison cell to a Davos stage isn't gossip. It's a signal. Crypto didn't die. It got disciplined. The wild phase ended. What survived was infrastructure, liquidity rails, and global demand. That's not defeat. That's adulthood. This isn't about Binance winning. It's about crypto no longer being optional. That's a checkpoint, not a victory lap. Now let's talk about XRP, because this is where people are either early or completely lost. XRP isn't moving like a hype trade. It's moving like infrastructure tightening quietly. Price hasn't gone vertical. No God candle, no mania. What matters is supply. Exchange balances keep dropping slowly, consistently. That tells you XRP isn't being prepared for a dump. It's being removed from circulation. That usually means one of two things: long-term holders locking it up, or institutions positioning before they need liquidity. Both are constructive. Add in improving regulatory tone, custody products, and cross-border payment corridors, and you start to see the setup. This doesn't mean XRP moons tomorrow. That's not how infrastructure trades work. It means XRP is being positioned, not pumped. Boring is what accumulation looks like before volatility returns. Now let's talk about AI, because this engine is revving under everything tonight. While markets were flushing leverage, AI accelerated. Apple is rebuilding Siri from the ground up. Voice, text, conversational, task capable. That's Apple admitting the old assistant era is over. AI isn't an app anymore. It's becoming the interface. Google is embedding AI into education. Free SAT Prep built straight into everyday tools. YouTube is building AI likeness features for creators, your digital self working while you sleep. Healthcare AI is moving directly into medical records and lab results. Powerful, convenient, and uncomfortable. And at the same time, warnings are surfacing. AI toys for kids showing inappropriate behavior, emotional manipulation, and data risks. That's the reality of acceleration. Technology is moving faster than guardrails. And that ties right back to markets. AI isn't just growth anymore. It's energy, it's resources, it's trust. Compute needs power. Power needs materials. Materials reshape geopolitics. That's why energy, metals, and infrastructure keep showing up tonight. That's why legacy tech gets punished when it falls behind. And that's why capital is rotating instead of relaxing. Now let's bring it back to the garage. While all of this was happening, while headlines flew and traders got chopped, Triple X was in the trenches. No noise, no ego, just execution. He wasn't chasing headlines. He was watching flow, liquidity, and timing, small entries, controlled risk, quick exits. That's how you survive environments like this. That's how you print when others panic. And now, after the trenches, after the macro, after the headlines, we turn it over to the queen of TA. Lulu, it's your show. Lights low, engines warm. Let it rip.
Garage gang, it's me, Lulu. And I'm back in the seat this morning, walking through the charts and how I handled the volatility. Quick reminder before we start. None of this is financial advice. I'm just sharing how I read structure and why I made the decisions I did. When I made this read, Bitcoin was trading right around 89,700. That level matters because it sits right in the middle of a decision zone. The morning started with a flush before New York really woke up. I waited for the selling to slow and for price to come back into the moving averages. Bitcoin dipped into the 88,800 to 89,000 area. Selling pressure stalled. The 1 minute stopped making lower lows and the 15-minute structure held. When price reclaimed the fast-moving average just above 89,000, that's where I took my long. Once in the trade, I watched the mid-moving average near 90,200. Price pushed into it, hesitated, and started wicking. That told me momentum was fading, so I scaled out and closed the rest when price couldn't hold above that level. Now here's what matters next for Bitcoin. If we can break and hold above 90,200 to 90,500 and build higher lows, then continuation back toward 91 to 92,000 is on the table. If we lose 89,000 again and slip under 88.5, then this move was just a bounce, and price likely slides back into 87 to 88,000. Now let's talk about Ethereum. Ethereum was trading around 2,960 when I made this read. ETH had the same morning volatility, but the structure was a little weaker. ETH flushed toward the 2,900 area and bounced, but it never fully reclaimed its mid-moving average. That tells me ETH is still in repair mode. If ETH can reclaim 3,000 to 3,020 and hold above it, then momentum starts to rebuild, and a push toward 3,100 to 3,200 becomes possible. If ETH loses 2,900 again, then this stays a range and we drift back toward 2,800 to 2,850. Now Solana. Solana was trading right around 127 to 128. Sol held up better than most during the morning volatility. It flushed into the 125 to 126 area, found buyers, and reclaimed the fast-moving average pretty quickly. The key level for Solana is 128 to 130. If Sol can break and hold above that zone and get back over the mid and slow-moving averages, then momentum opens up toward 132 to 135. If Sol loses 125, then this turns back into a range, and price likely slides toward 120 to 122. So across Bitcoin, Ethereum, and Solana, we're in the same situation structurally. These are decision zones. Break and hold above resistance, and momentum comes back. Lose support, and we slide into the lower range. Right now, I'm not chasing. I'm watching. I want to see holds above the mid-moving averages and higher lows on the 15-minute, with confirmation on the 1 hour. Until then, I'm flat, patient, and comfortable. That's the morning breakdown: where I entered, why I exited, and what needs to happen next. Not financial advice, just me reading the charts and respecting levels. If we reclaim and hold, I get interested. If we lose support, I step back and let it slide. I'll see you in the garage.